Hi, welcome back to another episode of the Backholder Pod. So for those of you who don't know, it's the big tech earnings season again. So we have every Tom, Dick, and Harry reporting earnings, and essentially, I think based on the recent report, Meta, Microsoft, and Google, Microsoft experienced a huge surge in share price, probably because of Activision, not really related to the earnings. And I think another one that just reported was Meta, and Meta essentially guided extremely well. It beats a lot of street estimates. That's why it's probably up like 11 or 12% post-market. So I think before we actually go into the discussions of individual specific topics, one of the core attention of many investors is really investing into the cloud sector. So for the cloud business itself, I think the three biggest one in the US, Amazon, Microsoft, and Google. We can talk a little bit more about Microsoft and Google Cloud in the later part of this video. But I think for one of the Chinese players as well, Baba recently just reported yesterday that they cut as much as 50% in terms of their price offering for some of their cloud services. So I'll share my screen right now, and I'll just generally run you through what are the specific product suites that experience this price cut and just my general opinions on it. So this is generally this is just cloud services or products in China alone. And this is just a breakdown. So you can see that actually, to be very, very honest, the 50% reduction is just storage. So we know that cloud storage itself is a very commoditized product. So there is not a lot of differentiation. It's just a platform. It just moved to the cloud and everybody is just storing your data. So there is no analytics, no nothing. But I think across the board, you can see that Baba has cut prices around 15%. And if you compare across AWS, Huawei, and Tencent, Alibaba is the most attractive one. So they're basically out for blood lah. They want to kill everybody and they want to snatch away everybody's lunch, because they are basically undercutting everybody in terms of price offering now. So from my own perspective of this, right, for those of you who haven't catch the Tesla discussion, I think you should go and talk about it first. I think there's a little bit of nuance here in terms of Tesla cutting prices versus Baba cutting prices. For Tesla, because it's a manufacturing plant, there are a lot of considerations that were shared by Bunti in the previous video. But I think for this case specifically, the analytics part is the more nuanced part. Because if your analytics is good on a cloud platform, businesses, that's the differentiation. So businesses will want to go for your products. However, if the analytics is iffy, meaning that the return on investment or your spending in terms of all these cloud platforms, they don't really see the very good ROI, then it becomes a price problem. And in this case, it does seem like it's a price problem because everybody is just trying to cut each other. And maybe I wouldn't be surprised if Tencent or Huawei starts cutting prices as well to try to stimulate demand in this case. So AWS China, I'm not too sure what's going on, but I know Tencent, Huawei, right now, there's another very strong contender in this space. I think it's called from China Mobile. They're actually set to overcome or to win Baba's market share in cloud in this year. This is analyst estimates. We don't really know until the year ends. But based on their previous earnings report, I think they grew by mid double digits. So I think it was 30 or 40% when Baba grew like 3%. So that's the more concerning part. I'll be covering it on a separate video on my channel if you guys are interested. So that's just the generally what's happening in the cloud space. So you just honestly just need to look at the earnings report and just triangulate amongst the different players. The bad thing is Tencent, right now, they subsume the cloud into finance as well. So you can't really see the breakdown in terms of the cloud growth. Huawei is not a publicly listed company. You can't see it as well. So you now only can triangulate with Alibaba and the China Mobile or I forgot what's it's a mobile business lah. Basically what's happening, the two differentiation between them is AliCloud or Alibaba targets more of the private enterprises, while the mobile, because it's a state-owned company, targets the public business. Hey guys, you know what?
What? Your stock 10x ah?
Not yet lah, but Weibo is now giving out free shares when you sign up.
Yeah, the brokers also giving out free shares what?
But Weibo is different leh. For Weibo, you just need to fund any amount to get up to 5 free shares for now.
Wow, any amount ah?
Yes, any amount. Just fund $1 also can. Then you'll get up to 5 free stocks worth up to $500 there.
So if you haven't signed up to Weibo yet, you can sign up using the link down below.
What lah?
So we can discuss the nuance later if you guys are interested, but yeah, that's about it. So I think back to Bunti's question on what exactly is happening to the share price. Truth be told, I think nobody really knows what's exactly happening. There is a lot of good news, yet at the same time, there's a lot of bad news as well. But of course, if you were to follow the price action and if you presume that the market is largely efficient, then the bad news is trumping the good news. And in this case, it's a lot of all the tensions, the Taiwan thing, they stir the thing, ownership and all the nonsense on the side that they try to move it. Because at the end of the day, when I look at earnings, right, I think compared to the past few quarters, Baba actually had reported decently. I mean, much better because margins are improving. Everything is reverting back to the mean compared to the last 3 quarters of 2022. So from that perspective, I think it was okay. But yeah, a lot of narrative building and I guess just movements. And I think this Baba Cloud cutting prices is a sign of weakness. I mean, at least as a shareholder, I see it as a sign of weakness. So this is probably, you can categorize it as one of the bad news. But yeah, I'm happy to discuss the cloud business.
Just now the table you shows Amazon China. So I'm quite interested because I'm not aware that Amazon AWS has a huge market share not huge, like has any market share in China. So do you have any like numbers to show what's their presence in China?
I don't, because I think they subsume it under others. So I don't exactly know Amazon how big it is, but the price chart is the comparison in terms of the pricing of the services.
You
not
mean
necessarily
including the services outside of China?
No, this is in China.
Okay.
All this is all in renminbi, the denomination, just now that I shared. But yeah, generally, it does seem like, Ali Cloud is pricing based on competition. They're not pricing based on the services that they're rendering.
Yeah. Actually, just last 1 month ago, right, they announced that they're going to break up all these small entities, right? I think apart from the logistic, Alibaba Cloud is also one of the business that they might break it up, right? Correct me if I'm wrong. So do you think that this is aligned with what they plan to do, or this like competition things is something that they are like really cannot maybe showing too much slowdown in growth, so they have no choice, have to cut out? What's the situation now? And would it affect their plan to IPO the Alibaba Cloud or not, in your opinion?
So I think it's because I've been following the company for quite some time, right? I think it's quite interesting because the cutting of the prices came at a very, very interesting time because it was just released yesterday, based on the time of this recording. The cloud growth actually is not a new thing. It has been slowing down for at least 4 quarters now. You can see that it went down to single digits, by the way. So the interesting thing is, why did they not lower down earlier? Meaning when they immediately see, they can see all the data is at the back end. They can see what's the take-up rate, how's the growth year on year and stuff. But they didn't decrease immediately when they saw a slowdown in growth. So then here I'm speculating as a shareholder here. China right now is in arguably a much better position than many of the rest of the world. And back then, when there was a lot of crackdowns in the tech industry, slowdowns in private enterprises and stuff, there's no point lowering prices because the pie is essentially shrinking. Everybody's cutting back expenses. Macroeconomic is basically like nonsense in China. But right now, it does seem like they're trying to slowly stimulate the economy, reduce reserve banking ratio and stuff like that. So it does seem like business activities are slowly reverting or ramping up, reverting back to the mean. And that's why they are out here to try to revert. It's probably more effective to kind of snatch market share in a growing market rather than in a shrinking market. So that's why I think at this current juncture, it does seem like China is probably turning. It's not reflected in the share price, of course, but this is based on the business decision and how I look at a few data sets. That's my own general takeaway. Then back to answer your question about this whole breaking up thing. Breaking up thing is basically financial engineering. It's not gonna, to me, I still think that it's just one pie, one cake, they cut 6 pieces. And whether it's 6 pieces or 2 or 3 pieces, like you said, logistics, main business and cloud, I'm not too sure. But I think for cloud now, it does seem like there is more advantages to stay in the business because they didn't say that they're gonna IPO. In fact, they are talking about China going IPO first rather than AliCloud. So there might be certain synergies to keep AliCloud now, but I wouldn't discount the fact that they might spin it out in the future. Because it's at the end of the day, if they're able to become like the AWS of China and continue holding 20-30%, I don't see why they can't spin it out and to make it into independent business units. But I think for now, the splitting out of 6 business units, the more important part is the governance one, where there's individual CEOs and everybody's accountable for their own units, rather than subsume everything and just brush it to the side saying that, oh, never mind lah, we forgive the management for not really putting too much emphasis on cloud or whatever because core commerce more important. I think there's no such excuses anymore. So that's just the breaking out the 6 parts one.
Chicken, just to ask, right? Because I'm not too familiar. For the Ali Cloud, right? Do they actually break out the profit operating margin for?
Yeah, they do.
They do.
They do.
Are they profitable as a?
I think their EBITDA, they just break even, if I'm not
Just
wrong.
break even. So
Yeah.
with this recent cut in the storage pricing, they will probably be expected to take a loss to grab market share. Am I right?
Assuming that, I think here comes the trade-off on in terms of whether they're able to grow fast enough or not to continue breaking even. But yeah, I would presume that they're going to go back to the negatives again if there is no huge uptick in terms of demand.
Okay. Do you think, as a shareholder, do you think that's a wise move to make in this current environment?
I think even for Ali Cloud specifically, I mean, in this current environment, it's a little bit different for the US and China. I think for Chinese environment is in a much, I mean, the cycle that they're going through is I would presume like it's going back up again. But for the rest of the world, it's going on the down cycle. But I think for now, in terms of the scale wise, right, Ali Cloud hasn't reached, the scale is nonsense. Like in China, the scale is nowhere to be seen compared to the rest of the world. That's why even Alibaba has the biggest market share in China. When you put in the global stage, it's 4%. And then Google just broke even. And Google is at 10%. You get what I mean? So there is still a lot of ramping to go. I mean, Google just broke even like in the latest quarter. But I did see that I think it's because of some changing in accounting policies of amortization. That's why they became break even. So that's why I don't even know whether Google break even or not. Like in actual fact, whether it broke even or not. So I think in terms of the scaling wise, there is still a lot of room to move in the Chinese business, and they probably haven't figured out the kinks yet. So that's why they're basically not profitable. Or none of them are profitable, if I'm not wrong. Baidu is not profitable, Tencent is not profitable. Cloud business, sorry.
So is it can we actually look at the AWS and make a comparison? I mean, it's different country, but let's say we know AWS achieve profitability at what percentage?
X amount, yeah.
Then maybe we can assume that China-wise may be able to.
I'm a bit skeptical and I'm a bit scared. So I see some hedge fund managers, I'm not going to name names. There are some of them that basically tagged a price like a X dollar amount and a percentage of operating margin from AWS. And then they extrapolate all to Ali Cloud, whatever all the Chinese cloud. I'll be a bit more caution when you are using this because, like you said, right, different demographics, different customer base, different way of people adopting it, and AWS is an international brand, and it's very easy for them to scale fast and scale big. In China, for many of these names, they are more locally based, meaning all the China. Yeah, China is a big market, yes. Ali Cloud also penetrates into some Southeast Asia. I mean, Malaysia government is using them, AirAsia is using them. So it's still the more ASEAN or more Southeast Asia-based companies. But to reach Amazon scale, very, very hard. And to reach that kind of margins, I also think very, very hard. But not to say that, I mean, every business wants to make money. So it will still be, largely speaking, there will still be a market for Ali Cloud or Tencent Cloud or whoever to tap into. But I would be skeptical and I would be cautious to just, Amazon did what? Just apply the multiple to them. Yeah.
I'll give a little bit more context in terms of like why we cannot just take Amazon and assume everyone will hit Amazon level. The reason is because if you compare them, right, when we talk about cloud, sometimes we talk about like, okay, as long as you have processing power, you have storage, you can help people store, then you are a cloud, right? Which is essentially true. But when it comes to like rolling out all these cloud services to other companies to actually use your services, right, you actually need to have a very good software platform to run it. So say, for example, there are certain services that you can only access using cloud platform. So you are actually willing to pay a lot more for all this storage and computing power just because the platform itself, right, is very good. Like your business actually built on top of it. Say, for example, like Netflix situation. So I think all this, right, it really need a lot of things. It needs the hardware part, which is all the memory, the computing power, and so on, and the software part as well, which is the services that build on top of all this cloud platform. And if you compare Chinese cloud market versus the US cloud market, I think the one that is lacking on Chinese market, right, is that the software part, right, isn't as established as the US counterparts. But when it comes to hardware, right, you're talking about all the, like the Intel chips, server chips, all the memory, right? I'm sure that Chinese market or Chinese player, they're already on par already. They have the money to buy all this hardware. It's just the software part will be a bit hard. And software, I don't think it's that easy that you can say, oh, we create something in the US, then we just port over to China. It's not that simple because of all these, like data protection and so on. So I think that's something that worth to bring out.
I think I also wanted to share, to add some color to this cloud discussion, right? Because I think the other time I went to Ali Cloud Summit, it was just for some fun exposure. So a local company, Ninja Van, and I'm sure you guys know the company, right? So there is this idea of using a multi-cloud solution where there are issues or certain types of analytics that they require, and they prefer a certain provider. So I think for Ninja Van's case, I think they use 3 or 4 providers, and Ali Cloud was one of them. And they invited the Ninja Van CTO or CFO. I forgot what was his position. And he was basically just commenting. But I'll take it with a pinch of salt because they invite speaker. Of course, the speaker is going to talk good about the company, right? But I think generally in terms of what Netflix might be a very specific or very different example because they built the entire business on one provider. And I think companies are increasingly realizing that they shouldn't be relying on just one provider because if AWS today say, I want to hike up by 200%, you LLST and you pay the 200%. So it's a good thing for Amazon, but it's a bad thing for Netflix. So I think companies have realized that perspective. And even though Microsoft offers one of the best suite in terms of their teams and whatever, everything integrated together in their cloud enterprise solution, companies still wants to adopt a multi-cloud and they want to build on different systems and different landscape and architecture. So that's why they adopt different modules from different companies as well. So that's just generally being it more multipolar and allowing for more players to all kind of have a eat at the pie.
Yep.
Yeah, that's
I give a little bit pushback in terms of like when you say Netflix just rely on AWS is not good. So sometimes I think there are contract agreement that's behind the scene that we don't see, right? Why they are so like happy to just get one provider. Sometimes they also want to make sure that, okay, I have certain size of business. If I chop it up and give different players, right, it's harder for me to negotiate a lot of things. So I bring another analogy, which is like, for example, NVIDIA, when it comes to chip manufacturing, sometimes they pass it to Samsung Foundry, sometimes it's passed to TSMC and back and forth. They actually chop it out. And there's a bit of like, risk management there. So for example, if Samsung can't deliver, they can fall back to TSMC and vice versa, right? But another example is Apple. They only rely on TSMC. They haven't been working with Samsung for quite some time. Will you say that Apple is making dumb decisions to fully rely on TSMC? But actually, maybe yes, in terms of risk management, it isn't that good when you rely on one supplier. But you see, when there's limited capacity on TSMC front, right, they always prioritize Apple because of the size of the order from Apple. So you see, there's a pro and con. It's not to say that once you rely on one player that's bad now. So I think for the Ninja Van example that you just given, I think there are many companies that, especially when they still not sure of how to utilize all this cloud offering, they will try to make it like a small project. And this analytic project, I use this cloud. The second one, I use another cloud, and I can compare and just see where are the pros and cons.
I would say that because we don't really have the data point, right? For those of you that are watching, especially most of you are employees of big companies, MNCs, right? Even Bunti yourself, right? I'm not too sure what your company is using. Does it adopt a multi-cloud solution, or does it rely on one, or does it still use a premise solution? I'm not too sure, but maybe you can crowdsource information and you guys can type in the comments as well. But yeah, you wanted to say something?
Yeah, I think multi-cloud is like very common, I would say. Even like I'm sure that Netflix, they're also using Google Cloud at some small project here and there, So it's not going to be like 100%, right? Just that when we say Netflix rely 100%, it's like their core offerings that's rely on AWS. That's true. It's just that I believe many companies, they have small project here and there just to test out, just to play around, because it's so easy, you know. You and me, we can spend like 2 hours, we can set up something on the cloud. It's that easy. So I'm sure that they are trying things here and there now.
Yeah, speaking about Google Cloud, Google Cloud recently just turned profitable. Bunti, I know you have an Alphabet position, right? Have you looked at the earnings specifically?
Just glance through that. So I think Microsoft and Google, they announced on the same day, right? I think Microsoft numbers is a lot better than Google. Google one, of course, their business, I mean, cloud is not small anymore, but still most of their operating income come from the search advertising business, basically. So I think, relatively speaking, Microsoft has done much better than Google, both their core business and their cloud business.
Google, in general, because it's much more cyclical, the advertising business is coming under pressure. Meta is also coming under pressure. I haven't really looked into the numbers because it just reported and we just woke up. But anyhow, in terms of Microsoft business-wise, it's not really reflective of the share price because the share price is affected by the Activision UK regulator stepping in and cancelling the Activision deal. So I think you are also a very big Microsoft shareholder or Microsoft bull. So in this case, do you think it's a net positive or net negative? And I think it's Warren Buffett got wrong in this case because he was betting for a merger to take place.
Okay, let me explain a bit more on Buffett Coco situation. So he actually liked Activision Blizzard, the business, even aside from these M&A deals. So he liked the business because all this gaming business, they have a very good games that they're selling, and these are profitable business. So it is generating cash. The price was...
I wanted to clarify again. So it's Munger that doesn't like gaming business. Buffett is okay with gaming business.
I don't know about Munger's stand when it comes to gaming business, but from Buffett perspective,
so Buffett likes it.
He looked at this business generating cash, he likes it, and the valuation was cheap because it was quite badly managed at some point. There's a lot of scandal involving the CEO and so on, right? So that's why the price makes sense for him to buy. He said that if the deal would just goes through, right, then he would just profit the difference between his price and the M&A price. And if it doesn't go through, then he's still happy with the business. That's why to him it's like there's no risk when it comes to Activision Blizzard. I want to answer on whether it's good or bad for Microsoft. I think net, right, it should be bad because I think Microsoft, they have so many line of business, right? Some, like Windows offices, or this like LinkedIn, also their core business, Azure core business. And I think the gaming, right, is something that they want to grow. And by acquiring Activision Blizzard, I think they have something that they plan. There's a roadmap on after this acquisition, how are they going to grow this space here? But if this one cannot go through, right, that means their plan, they have to redo again and so on. So in terms of strategic, I would say it's not good for them. But in terms of the deal, because it was it was decided some time ago, and I think in terms of the price, I think it's not cheap when it comes to pricing. And now suddenly they don't have to pay this price anymore. I think they can save out the cash and use it for some other purposes and buy something which is come down in price, right? So in terms of the pricing, I think there's some offsetting there, and I think market also reacted positively because of this.
Okay, in terms of like cloud-wise, right? Like let's say if we talk about Microsoft Cloud, right? Do you think they have a chance to dethrone AWS?
I think they are. I would say they are very good when it comes to their sales and marketing because they already like most companies, they're already using Microsoft Office and like Windows. So it's easier for these companies, right, to actually get Azure services as compared to AWS. I think AWS is much better for those startup that you want to build on their platforms. But when it comes to bigger enterprise, I think it's more natural for them to use Azure. So they have been taking advantage of this relationship with all these enterprises and really go big on this business, and they are doing well. But in terms of dethroning AWS, I don't think I don't think so. I think AWS is still very dominant. Not so easy to dethrone them. But achieve a scale that is like similar to AWS, like that one is definitely possible. Dethroning means that they even bigger, right? I don't think that's easy thing to do.
From an outsider point of view, because I'm not a shareholder, but from where I see, right, I think the Microsoft, the share price is really very resilient. Yeah, is because of the business model. they have a lot of recurring income from all their subscription-based services. So they basically the recent downturn, they actually went down a little bit. Then after that, coming back up again. Like they survive it much better than like the others, Google, Amazon, and all that. Yeah. Of course, those are also coming back up, but I see not as strong as Microsoft. I don't know about Bunti's view. I see Microsoft as it looks a bit stronger than the rest though.
Yeah, I think also because the type of business, although we tend to call all these, like all these companies as like big tech, right? Actually, when it comes to the core businesses, they are still very different. For example, like Google, Meta, I would prefer to group them together. They are like advertising. And then when it comes to Microsoft, it's really the enterprise software, Windows. And all these are relatively more resilient as compared to advertising. When there's economic downturn, right, you will cut your marketing, cut your burn, and just survive first. Then I grab market share later, right? Whereas for Microsoft, have you heard about any friends that say, oh, my company just changed to an unknown OS because Microsoft Windows is too expensive. We can't afford Microsoft Office, cannot use Excel anymore, have to use some other, unknown names. Have you heard about this? If even move to like, let's say like Google, what they call it, Google Workspace, it also is like not practical. So I think this, in terms of their business, is the type that is more resilient. Right? No people will change from Microsoft Windows to Mac because they need to save costs. Right? So resilient wise, yes. But in terms of how good are they, I would say that, okay, maybe ChatGPT side, there's some, hype there. They're doing things that seems to be like try to disrupting Google, although I don't think it will be that easy. But they are executing well. We have to recognize that Satya Nadella is just a great CEO. Yeah.
So in terms of the Azure, right, what's their, like, is cloud contributing like profitability to their bottom line? Like
Azure, right? Yes, yeah. Azure is profitable. Yeah.
Profitable. So like at 22% market share can profitable already.
Margins are nowhere near AWS, by the way.
Oh, which is how much? Because if the reason why I asked, right, is I'm again trying to put this comparison. If let's say Google Cloud, right, 9% market share, roughly break even, and then we find out how much Azure profitability is, then we can maybe do a rough extrapolation. Like, okay, let's say you have 15% market share globally, maybe you can have this type of profitability.
But I think in terms of the market share wise might be a little bit very hard to extrapolate also, because the market is ever growing. As we know, the cloud industry is expected to, I forgot what's the CAGR, but I think it's more than 10+% for the foreseeable future. So in this case, the absolute value is also increasing. So I think the break even is on the absolute level rather than a market share percentage basis, because unless the Chinese market suddenly boom and all the businesses start using a lot of all this kind of everybody start moving and the TAM suddenly just explodes. If not, I think the US and for example the rest of the world will continue increasing, and then AWS, Microsoft, Google continue competing, and then in China, your Alibaba or Tencent, Baidu will continue competing as well. So I think it feels more of like a break-even absolute figure rather than a percentage.
Yeah, but what I'm saying is like we can use it as a gauge, like we can factor that percentage increase into account. Even for China side, the increasing 9% per annum. Like mathematically, you just need to do a estimation. Like if, like for example, if they reach about 15% market share in China, what's the likelihood that maybe they will like hit profitability?
I think if we follow absolute figure because market share wise, I mean I'm afraid of the growth rate and stuff but I think in terms of the cloud now, their break even is at 7.5 billion USD. Google but now I a bit skeptical also because they need to show consistent profitability. I am worried because I think I read somewhere that they did some accounting changes, so that's why they suddenly became profitable. I'm sure it's legal, but
did some accounting changes as in what kind of?
The amortization, they moved the amortization policy. I think so. I'm not too sure the specifics, but they changed their amortization policy so that they can recognize profits.
I haven't read in details, but my understanding is that they move some costs to some business line to the other business line, because they have like different business lines, right? So when you move that, and let's say for one tool that can you tag it like exactly this is used by which business line? Sometimes there's some shared situations, right? So when they move this, they will have some impact to that business line, but in total, it's still the same. So I think there's some like all these classifications, things that cause these differences. But I think I want to share a bit more on Microsoft Azure margin. The reason I don't have any numbers on top of my head is because they haven't released a numbers that's specific for Azure. So they tend to group a few different products into one lines, right? Which include other stuff. So it's a bit hard to look at it. But for AWS, I think they are showing the numbers. Maybe later we can paste it in the screen. But the numbers that I'm looking at is, let's say, the operating margin for the AWS segment, right? Used to be about 30% in 2021 to 2022, but then recently also came down already. The most recent one is 24.3%. Yeah. So that's the operating margin. Yeah.
Still pretty high, actually.
That's the highest one, AWS. The rest are all lower than these numbers now. Because in terms of scale, they are the largest. So this is a scale business, right? Like I mentioned quite a few times. You can't operate a cloud business with a very small scale. Yeah, you need a lot of large numbers to make it work.
That's why only big companies do it, right?
Yeah, I give you another example. Now with all the ChatGPT hype, right? I think quite a number of all these cloud businesses, they start to design their own chip, like including Google, AWS also, they design their own chip. Sometimes it's not like they say, oh, my chip is better than NVIDIA, which is not the case. Like they are nowhere near NVIDIA level. It's just that they can say that, okay, in terms of like giving the best performance, sometimes I want to give optimal performance given how much energy costs. Okay, so it's not the best in one metrics, but it is good enough for the other metrics. But you design the chip, you have a one-off cost to develop. Then you send it to TSMC to manufacture. Then you put it into your server and you can rent it out, right? But you have that fixed cost regardless of how big is your business. So if you have a big business in cloud, you can actually share all these chip design costs into more servers. And it is like economically is viable to do these kind of things. Then you have a moat already because other people's, they use off-the-shelf product. It's very not so optimal in terms of the performance over energy cost, right? But yours is good because you have a specialized software for certain specialized usage. For example, in YouTube situation, they actually design chip for video processing because YouTube video, you really need specialized software to make it efficient. If not, it will be too expensive to maintain a video platform, right? So they can do all these things once they have big enough business. So the rest, right, the small cloud players, I think it's very hard for them unless they really can find a niche area to say, okay, I'm very dominant here. I can do specialized things and make myself even more dominant in this space now. So I think now there are still companies that are trying, but eventually they will be left with, I think maybe like 3, 4, even 5 companies. It won't be like 10 plus cloud companies after 5 to 10 years.
Okay.
Yeah, I share the same thoughts in the Chinese market as well. Because now every Tom, Dick, and Harry seems to be wanting to go into cloud as well. ChatGPT is also the same. So I think it will just converge where people just trust that few providers and then the rest just goes missing.
I actually think ChatGPT, there will be more players playing. The reason is because to differentiate your offering, you need a differentiated data, and then you need a differentiated. I think actually on the model side cannot be differentiated because it's still but the large language model. I mean the model family is still the same. It's just that when it comes to details on how you implement it, there's some differences. You can do your own specialized things. I think eventually it will be based on data. Say for example, like Elon Musk say, okay, I have Twitter. Why should I let other people crawl my Twitter data? So I can create a GPT that only use like all the publicly available one plus my Twitter data. So my ChatGPT will be like some special flavor to it that people want to use because they want to have a GPT that can answer you based on Twitter data, right? So this is like Elon Musk. Then other companies, they will do their own thing, try to take advantage of the data that they have, right? Like Amazon, they can do their GPT based on e-commerce data. Okay. So there will be quite a number. Yeah. And it's not so expensive. Yeah.
I think one of the good users, I think, right, would personally, I think would be like if TripAdvisor have their own GPT. Like usually planning for a trip is such a chore, right? But if they can crawl through all the TripAdvisors, all the recommendation, like plan for me an itinerary, 10 days trip to Japan with all the restaurant like 7 stars, not 7 stars, 4.5 stars and above, like at least 1,000 reviews and all that, right? Then, and you can like filter the budget and everything. That will be very specific for one application. Like you just use the travel data. You can actually pull in data from different like those kind of traveling websites. Yeah. TripAdvisors and whatnot lah. Then you just pull in from those websites and then you congregate and then they crawl through. They give you an optimized based on your specific requirement. I think that's a very good use.
Auto GPT, they straight away book for you. You just like, they just give you instruction. Now you should go to airport, then you go. No need, actually the car will arrive already, go and pick you up. So even the cab also is all GPT done already.
Auto GPT means what? Sorry, I'm not in
Auto GPT is like one level above ChatGPT. So what it does is that you just give objective, and they will say to achieve this objective, they will break down into what are the tasks that is required. Say, for example, the first task is to plan your trip. Second task is to buy the ticket for you. Third task is to make the payment. Then fourth trip is to book the hotel for you. So they will break down into the tasks. And for each of these tasks, right, there will be a GPT that go and crawl in and say, okay, go and execute all these things. So it does everything for you.
So it's like a butler kind of thing. Like you tell them, okay, you plan this trip, then you give him your credit card number.
Yeah.
Butler goes and does all the booking.
Yes, including the booking.
Reports to you like, okay, this is booked for this price at this date and blah, blah, blah.
Yeah.
What?
Yeah, that's the Auto GPT.
Is it like very expensive to use?
I actually don't know. I'm not sure whether how open it is. Like, can anyone try it out or not? I personally haven't tried it, but there are people who know how to use it and they already try, because ultimately they just need an API for this GPT to talk to the agents, and the agents also need to allow on all this. Basically, it's like the auto API kind of things that allow them to talk to each other and execute transactions. So. Wow. Yeah, it's like happening already. It's just that I don't know whether it is like that easy to use it or not. I have no idea now.
It's pretty scary to give your credit card number to like a bot, and then they go and execute all the things. Then it's like, it's all done. Book this hotel at like 5 million for how many nights? Then I'll be like, what? I didn't want to do that. No.
They can ask you to confirm before they book. No problem.
Maybe they should be able to ask for confirmation.
Yeah.
Yeah, that sounds
It's just
good.
the interesting part is that even the execution part also is part of, they can do it, basically. That's the interesting part.
Yeah, man. The only thing that they can't do is probably like physically deliver something.
Actually, you can argue that it's possible, because let's say if they book Grab for you, Grab car go and pick you up, that car is physical, right? So it's like like online, offline, then hardware, software, all this will merge together to provide holistic services. I wouldn't say that it's all software, So nowadays with apps, you can talk to services, the hardware will come.
Wow.
Right?
Next time it seems like we are the drones, yeah. The AI will be the overlords. We are the drones. Like they say, you go here, like you go and pick up the shoes here. I've already sent them for like washing or servicing. You pick up the dry cleaning.
Yeah, which is like already happening if you are, let's say, like Ninja Van, right? You are describing Ninja Van driver situation now.
Okay. Oh man, sounds like a end of the world scenario. Okay, Chicken, what's your thoughts?
No, I don't, but I'm just thinking there are a lot of, at the end of the day, AI or software are still tools. I do know people that really enjoys planning for trips. So if everything is automated, then it steals the joy of exploring and finding things. I don't know, but I guess there is that optionality there, and you can do however you want, or you can adopt it however you like in your lifestyle. So then the human condition is just the experience, and you choose. It's like playing Sims lah, Sim City, right? You pick or you personalize your own experience, and then you just live life and thank you, goodbye when the time is up. That's all lor. So I think AI is just here. It brings certain sort of joy. It reduces certain sort of chores. But at the same time, it makes me question what exactly are we doing. Like, what are we supposed to do? Or we're really here to just have a good time and thank you, goodbye. I don't know. So this just I'll just end off this here lah. Yeah. Any ending thoughts on?
I'm surprised you didn't ask them to smash the like button.
I'm surprised too. So smash the cute little like button, and you'll see you in the next video. Goodbye.
Yeah.